Okay, good evening, everyone. It's my third video for, I think, for the past 3 days. I don't do videos like this, but when we're at a very critical, reversal or continuation points like this, I'm playing it to my chart, and I want to show you a lot of things that has been happening in the chart. And this particular place you're seeing right now is a very critical point in the market, and these are days, I prepare for my large movements. And as you can see, I'll be doing something called a multi-asset analysis today by using guiding myself over time. Are you getting it? There's a way I use DXY, which is a US dollar, gold, EUR, and GPUSD, anything that is happening in those four markets. Are you getting it? To make my decisions when I'm trading. And as you're seeing here, um, on the weekly, you see that what's it called? Um, um, the dollar, which is DSY, is in these bullish continuation. Sorry, um, rising channel. I guess, and as it stands right now, we're at a very critical point on the daily. So the daily chart is where the structures are used in training our market. Yeah, way to before taking more trades. I guess, and so um, as you can see on the daily, we had this support from the downside, which the market actually broke, found support and even broke, but did a fake out and continue going to the upside. So same thing is happening here right now. Remember, I gave this warning. Same thing is happening here right now. We have another, what's it called? I'll try to make this video very, very precise and indicative. We have a resistance zone around this area. So I'll tag this a resistance zone because it's an area of value, sorry. And I'll tag it as an area of value because we had a previous resistance, turned support, turned support again. Turned that the support that broke again. Are you getting it? That gave us this resistance, and we are at that resistance zone right now. So if a reversal is going to happen, our lower time frame is going to tell us. Are you getting it? So this is a daily, so I'll leave that particular structure. So I'm just trying to bring to your notice how to trade, how to know when your market has reversed, how to know if what's it called, using a multi-asset analysis. So this is the multi-asset analysis I do. If this particular one stops here, which means the other three will stop. That means the direct correlation to the dollar is your Euro USD. We also have the GP USD, which is volatile more than Euro USD in its movement. That's what I know about GP USD. This gold, GP USD, and Euro USD has their own behavior, even though they are direct correlation to the US dollar. Are you getting it? So I will show you what to look out for on Euro USD, what to look out for in GP USD when those things are happening and you are in a trade, maybe gold, you are in a GP trade or you are in your Euro USD trade. You can actually use gold and GP USD to confirm your bias if they are going well, and also your US dollar. So these are daily chart, and in the GP USD, I want to see where we are. As you can see, the market is quite overbought. Overbought on the was it called on the RSI, the daily RSI. I love my daily structures, so I'm just sharing you market structures. And on my MACD also is showing that the buy momentum is exhausted. Are you getting it? Because the price has been going down in our MACD. Are you getting? And as you can see, the smooth and what's it called? MACD RSI is about crossing the shoulder like it did here and it did here. Are you getting it? So it's showing me that the buy momentum is weak also in the MACD. So I've gotten about a few confluences. So I'll dive into the chart itself to confirm with market structure and my price action patterns to see what is happening. So probably I'll drop the Farley first, drop into the Farley chart. You can see you see market structure, apply your market structure knowledge right now and your price action pattern. Market structure, this is a rising, what's it called, channel that has been, and rising channels are bearish continuation pattern to the downside. If it goes to an area of value, which is, I call this, and I'll label this an area of value, an area of value that we are right now. So this point is very, very important in this journey, as you can see, because when we went to the daily, you can see that anywhere your previous support and resistance meet. Are you getting it? I call them an area of value. So I will reversing from here. We're about to find out. So this, I'm still on DSY, but I will give you the combination using gold, Euro USD, and GP USD for you to know where and where you are. In case you're in the GP trade, you can check Euro USD to see what Euro USD is doing. If it's performing very well, you know that GBP trade will go through. And if you're on gold, it will also show you that your Euro USD and your GBP trade will also do what go through. But three of them have their particular behavior. So I think just pray that I'm able to, pour out how I see the market and how I get confidently in my trade to run if I am on a trade on any of these assets. I get it. I trade any asset. I know a lot of people say that just face one asset, this and that and that and that. I trade multiple assets because these assets on their own move in their exotic pairs or their minor pairs. Like let's say Euro USD. If I'm to trade Euro USD or GP USD, directly correlation to the dollar. There's something I do, and what is that thing? If I'm to take any trade right now, I usually go to probably if I'm trading either Euro, if I'm to trade either Euro USD or GP USD, I will go and check their direct correlation and see what is happening between them. Are you getting it? Seeing the one that has the strength, the most strength. So is that particular asset I would rather trade. So right now, what are you seeing on GP USD? I can see that GP USD on the daily, or sorry, Euro GP on the daily is actually trying to, Euro is actually trying to be stronger, but we are at a particular critical point right now. So anyone that breaks will be the strongest that will move higher more. So right now we're finding, what's it called, the support and resistance on Euro GBP. Are you getting? So which one should you choose? So sometimes it's not saying you are just adding sentiments and emotions into the market if you are just a GBP trader, because Euro USD might be moving more than GP USD, or Euro USD might be moving more than gold, or because you are a GP trader, you just want to trade on GBP. We are here now. Any markets that gives me a breakout, are you getting it? If Euro breaks out of this market to the upside, because it's a direct correlation to the pounds, and retest, are you getting, and find support, GP will, sorry, Euro USD will move more than GP USD. And if GP Euro breaks to the downside and retest, you see that GP USD will move more than what's it called, Euro USD. That is just how to, that's what I apply. I call them multi-asset analysis. Are you getting it? Multi-asset analysis, not your multi-time frame analysis. I check what is happening on euros to see what is happening. Same thing like let's say about, is it a good time to trade gold, and is it a good time to trade Euro USD or GP USD? Now, if I'm seeing Euro USD moving more than GP USD, I'd rather trade Euro USD. Then if I see Euro USD also gaining more than gold, I would rather trade. How many of you have opened this particular gold euro trade once? Have you ever traded it in your trading journey? Many people don't even know about what I'm talking about right now. But as you can see, gold is stronger than euro, because gold right now is finding something. So a lot of this particular charts are in your broker. This particular euro chart, you must not trade euro dollar. Are you getting it? You must not trade gold to dollar, because what you're trading alone is just gold, ZAU, ZAU, XAU, USD. There is something called Euro, SAU Euro. You can trade this. Look at what is happening right now. This market actually have broken out of this particular, downtrend, and gold is gaining more weight is moving faster than the euro itself. So if gold is moving faster than euro, so according to market structure, let's drive this. This market came there, was exhausted, did a W pattern that has broken and retested right now. Gold is bullish and coming back up. So instead of you even trading as you go, well, main gold is gold dollar, why don't you trade euro gold, as in gold euro, that has a proper market structure that's formed for you right now? Because according to this market right now, this is a W pattern that has broken and retested, and even giving you a bullish market, a bullish morning star that is trending to the upside. And the target of this trend is about how many pips? Because it started from, sorry, hold on. you can see, do a multi-asset analysis. Sometimes I know I've seen many brokers trading the gold euros, but a lot of people just focus on just the main gold itself, which is normal gold dollar. This is the market now that is telling you that gold wants to go back to the upside, and that's why gold even broke out last week that we didn't see. But if you're following a multi-asset analysis, you would have seen this. Same thing like gold GBP. There are a lot of brokers that have all this gold GBP. You don't trade them, you don't even look at them. You just trade just gold dollar when these assets are actually trending and even giving you good proper market structures themselves. Are you seeing it? You can see that gold is even doing a very, very sweet market in this market, but we just tend to do what? Trade only what's it called? This is a drop. Are you getting it? Gold exhausted, retested, and this market is coming back to the upside now, trending back to the upside or trending back to this what's it called? Area of value. Are you getting it? And from 1,527 on gold GBP, what's it called? Gold GBP to 1,507 something, about 200 to 300 pips. This is a very good trade also on gold GBP, and a very good trade also on gold, what's it called? Gold euro that is happening here. But we all just focus on the lower, what's it called? We just focus on the main gold without even coming to this asset because we were trained to trade only one asset using sentiment. I call that sentiment. I trade any asset. I trade any asset. Anywhere I see my perfect market, I trade that asset because this asset does what move. Are you getting it? So I've shown you something here right now. You can see that if truly this is a perfect break of structure, what happens? Are you getting it? Look at, if truly this was a perfect break of structure to the upside, what do change of character, sorry, to the upside, what happens? The market reverses back to just what? 0.382. And if it reverses just back to 0.382, it will give you a bullish signal around that area. And what do you see? That's a morning star, which is a reversal candlestick pattern back to the upside. So even though gold is going to come down, are you getting it? Gold euro is telling you that I'm going up. Are you getting it? So I will categorically bring that, that sentiment I have on gold euro and gold pounds into what is happening on gold dollar right now, telling you that I think gold is about, moving what to the upside. We can even use that to judge also because that's where you know where is the money flowing from. Let me use that word. Where is the money flowing from? Because gold is right now at a critical point. Is it going to break it? Gold euro is going to break it. This is where you do your findings. That's why I call myself an investigative journalist in this trading. I investigate all the assets. I get to know what is happening. Gold is right now here. Anything that make gold to break above, gold euro to break above here, I get in and retest it. Gold is going to come and do another higher high because gold actually came back to what? This was a break of structure to the upside. Are you getting it? This was a break of structure to the upside, and this was what's it called? Here becomes what our new major what demand zone. It came into that demand and found demand and started going. And these are good, very good switch structures to trade. But because you have sentiment or your mentor have taught you that trade only gold or trade only GBP USD or trade only Euro USD, that's where you don't even come and see all these perfect markets that have been playing out all this while because when this move started happening, according to price action, when this move started happening, where were you on gold euros? A lot of your brokers have all these gold euros. They have all these gold GBPs. Depends on the brokers you're using. Why we're finding this resistance right now is because of this market structure you're seeing here. And all I can tell you is that as long as this market has switched and changed character to the upside with this and retested just 0.382, not even a dip down to 0.5, gold euro is on a move back to the upside. And that is going to give me my bias and give me my, are you getting, that's going to give me another, confidence that, what's it called? That gold is about moving to the upside because if it's going to move against euro and it's going to move against the dollar, sorry, if it's going to move against GBP and it's going to move against the euros, who is the dollar that it cannot move against? Gold is very, very strong. Then that's when I go and do my, what's it called, fundamental analysis of what is making gold rise and why gold is no longer going down. That brings us to our previous what's it called, analysis. I just had to do those Euro GBP and show you the direct correlation, what to trade, not when to trade. Are you getting what to trade? Money is actually moving. Either there are sometimes you see money move flowing, you see gold consolidating and moving sluggishly, but euro is moving more than GBP and gold itself. That is because you are not checking your euro GBP. Money might be flowing from GBP into euros. Gold might be flowing from gold as what's it called? Gold might be flowing from gold into euros, and euros will be high rising, but because of sentiment to one asset pair, I have to trade one asset pair. You are just following and consolidating within, what's it called? You are consolidating within your AUD because you are an AUD trader, or you are, what's it called? Uh, you are a what's it called? You are an NZD trader, but you know that this market is actually consolidating within its exotic pairs or these minor pairs. You are, using sentiment to follow up. That's why you see that most of the time, a lot of people ask me that, why are you trading Euro GBP? Sorry, Euro AUD. That's because I know that this is a direct correlation. If euro is going to gain against what's it called, the Australian dollar, that means the Australian dollar will pause, which euro is going to move, as in you see euro, AUD consolidating. That's because money is flowing from there into euros to be able to conquer other asset pairs like GBP and the rest of them. Have that at the back of your mind today. Are you getting it? So let's come back to our multi-asset analysis. Let me finish what I have here. We know that this is an area of value we are right now. So are we going to buy from there and continue going upward? We're about to find out, because if we break above this, that means we are coming back to this, phase, because the market moves in phases. We are coming back to this phase from 105 all the way to 10, what's it called, 107, and you know what that means for gold. Are you getting it? If this is going to gain back to the upside and continue going, gold will come back to $18,850. And if it's going to happen like that also, Euro USD is going to come down also. And if it happens like that for, what's it called, JP also, you will see that it's going to do so. Watch closely, don't get carried away. I'm about showing something that will blow your mind right now, and to play out exactly, because I'll be using gold, I'll be combining gold, combining Euro USD, and also combining what's it called, JPUSD, in this particular, multi-asset analysis I'm about giving you right now. So the heading will just be tagged multi-asset analysis, and I think I will be using also my bias. I'll let my bias be, the pounds, the gold euro, and the gold GBP I've had already, to say that I think gold is about entering a very, very, very bullish market, which will also give rise to GBP USD and also Euro USD moving to the upside. So where should I start? Let me start with gold. So according to the gold analysis, the gold chart I did this morning on my phone, because I didn't have time. I just had to do this because these are the only time I have right now in the entire, trading, what's it called, the entire trading market. So as you can see, if you are a very, very, very good, a trader that started from the foundation, which is a candlestick pattern, there are a lot of things you see on the, what's it called? There are a lot of things that you see that will tell you that, okay, this market has done what, reversed. Now, let me show you the downside. What are you seeing here? What is this? The candlestick pattern. That's a morning star. What is this? That's a morning star. What is this? That's a hammer with a bullish candle, confirming that this market is on its way to the upside. So if on this particular day, which was Monday, said yesterday, you should know that this is a morning star that's happened here. And if we find another green candle again, gold is now bullish, because if it closes with another, the next day closes a green candle and we are not selling down, are you getting it? That's to tell you that gold is in a bullish phase already. So you will now apply your chart pattern knowledge also to it for you to know where you're going to. That's why a lot of people are failing in this, what's it called, in this trading journey, because they didn't really start from the foundation, which is the candlestick pattern. They didn't go through their the candlestick pattern. They didn't go through their chart patterns, which are their price action patterns also. They just believe they watch one or two videos and go for one or two seminars or something like that. Gold is as in this trading journey is actually a university where you have to combine a lot of confluences and understand the sign languages this market is actually used in flowing and moving. Are you getting it? Because if you have all this knowledge in your head without going to the book, without going to the internet, knowing that how to draw your trend lines and knowing your market structure, you will see the structure that is about to come outside. You see how the wave is about to do what go and flow very well. You see, gold euro, gold GP is telling me that they're about flowing to the upside. So you combine them, you see where the money is flowing from into this asset. Money flows from one asset to the another, whether you like it or not. Be it euro, be it GBP, be it gold, be it Bitcoin, be it dollar, they all flow and they have direct correlation. You have to investigate whatever is happening before you do that. So going into this market proper, are you getting it? Gold was on a downtrend. Are you getting it? As you can see, I don't know what's happening to my sorry, 1 minute. Let me try and reload. Very important. Gold was on a downtrend. Are you getting it? On a retracement mode. Let me just use it because on the monthly, if you watched my video yesterday, gold was on a downtrend. Sorry, gold. So you see, gold, gold USD. That's ZAR USD. Is that what I was using? Let me use gold USD. Okay. Let me go use gold USD. So if we go to quickly, can I rush it quickly? If we go to the monthly chart, a lot of people come to the monthly chart, you see that gold is in a consolidation phase. Consolidation is not even moving on the monthly. So for it not to move at all, for sellers not to be on the monthly chart at all, that means that goes in a consolidation phase and the uptrend might continue if are you getting it? The consolidation continues and there are no sellers on the monthly. So for sellers not to be on the monthly, this market might actually do what? Continue going on because I'm not seeing sellers on the monthly. But a lot of people don't do that multi-asset analysis. All they just do is be on their lower time frame, anticipating that the market should continue going down, but it does not work that way. You have to start from your higher time frame to see the picture of whatever is happening. Gold is in an uptrend, so is it going down or is it going up? The higher time frame is telling us that gold is consolidating around the what's it called, the monthly resistance, and it is likely to continue its trend in that direction. So we'll drop to the weekly to map out whatever is happening. We'll have a demand zone here. We're coming back to that demand zone, must not come to the demand zone. So I can take this off and tell you that I'll go to my daily chart, which I have my perfect structures playing out there. Gold is in a falling wedge. And what's a falling wedge? Monthly is what's it called? Monthly is consolidating. So if it's going to go down or it's going to go up, it's going to show us on our daily. If you want to trend the monthly, use the daily. If you want to trend the weekly, use the 4-hourly chart. If you want to trade the 4-hourly chart, use the 15 minutes or the 15 minutes time frame. So I have something I call what's it called? What's it called? Structure. What's it called? The hard daily structure. Like I said just now, if you want to trend the monthly, use your daily chart. If you want to trend, if you want to trend your monthly, use your daily structures. If you want to trend your weekly, use your 4-hourly structures. If you want to trend your 4-hourly structures, use your 15-minute structures. Perfectly well, you can take the faces. It's moving. The waves are all happening on the lower time frame. I call it Z4 for something. I will bring that knowledge. I think I'll do a video on that particular one. But right now we are doing a multi-asset analysis right now as we speak. So first of all, I've been saying this, we have what's it called? The market is telling us on the monthly right now that gold is consolidating around the resistance area of 2060 and is not selling well on the monthly. But on the daily, as you can see, if we want to trend the monthly right now, we know we'll have a breaker structure and we'll have a demand zone on our Fib demand zone. So a demand zone, if I bring my Fibonacci in, you see that the market has come to the Q zone and is around the Q zone right now. And any break out of the Q zone will either take us down to 1850 or break above the Q zone 0.5 and retest it to carry us back and even give us a new high. So follow this up. What can you see as a trader that went through your candlesticks? You're seeing your candlesticks playing out Are you getting it before you take trades, which are your reversal patterns or your continuation patterns? What can you see as a candlesticks? I've shown you 3 bullish candlestick patterns right now happening. One happening here on the daily, each happening at those particular places. This is a reversal candlestick pattern that reverses market back to this previous what? Resistance. And this is a reversal candlestick pattern that reverses market into what? This resistance. What's it called? The morning star again. And what can you see here? The market got exhausted for 4 days before selling down to this particular place. So if the market is supposed to continue trending to the downside, it's not even supposed to pause here at all. This exhaustion. So for it to get for the sellers to get exhausted and even allow this to happen, it means that buyers has a chance of even taking back this market according to the monthly, what's it called? According to the monthly structure that is consolidating close to what's it called resistance, and sellers are not even much there. But these are large money. If you have been trading these are about how many thousand, how many hundred pips, these are money about how many hundred pips, these are about how many hundred pips. You would have seen that I might be talking too fast because I'm doing a multi-asset analysis, not just a multi-time frame analysis. And this market even trend on the lower time frame. This is the daily right now. I say if you want to trend your monthly, use your daily. If you want to trend your weekly, use your 4-hourly chart. If you want to trend your daily, use your 1-hourly chart. If you want to trend your 4-hourly chart, use your 15-minute chart. The trends are always there. So you can be taking those structures. Are you getting? You can be taking those swings happening. So I'm seeing a daily structure right now. So I'm going to use a 1-hourly chart to trend the daily structure, the swings that's happening, or the phases. Let me just say the swings that are happening. But my daily structure is telling me right now that the market is in a, falling wedge, a falling wedge. And what is a falling wedge? Is a bullish continuation pattern, and it's even showing something right now that the market have been trending perfectly well to the downside. So I was supposed to come and break and continue breaking structure, but I'm exhausted. Again, so if it's exhausted, this is a bullish vibe happening. So this is my daily. So my daily is going to tell me whatever is happening because the trend is going to be on my 1-hourly chart. Take this home today. Take this, go and look for it. Check Google. If you want to trend your monthly, what do you use? Use your daily chart. If you want to trend your weekly, if your weekly chart are showing perfectly well, use your 4-hourly structures. Are you getting? You see the waves happening there. You see the swings happening there. Up, down, up, down, up, down happening there. So this is daily right now. If you want to trend this daily, go to your 1-hourly chart. Everything is inside your 1-hourly chart or your 2-hourly chart. The swings are already in there. So you can be taking your swing low, swing high, swing low, swing high. You understand? Lower low, lower high, lower low, lower high. Then if you change this character on the daily again, you can start using your 1-hourly chart. Are you getting to enter your what's it called? Lower higher low, higher high, higher low, higher high, higher low, higher high, like it has been doing on the dollar right now. So this is the 4-hourly chart of the dollar, and that's because it's not just a daily structure. Are you getting? Let me see. This is dollar is not clear on the daily. So is it clear on the weekly? Yes, it's a weekly structure. That's why I'm using my 4-hourly structures to see if I can trend this. And my 4-hourly structures have been trending well. If you have the basic foundation, we had a double bottom that got exhausted. We broke to the upside and we tested. Since that day, the market has switched back to the upside. So when we go here, we're supposed to break down that fake out. We did a fake out and break back in. So listen to this particular area right now. I'm going to show you Euro USD, how this market actually moves in phases. So since that day, we've been doing higher low, higher high. So this was a low, this was a higher high, this was a higher low, it was a higher high. We had on a higher low. Are you getting it? So the market itself has been trending, but because it has not been clean, you've not been seeing it, and you knew this was a higher high. How do you trend the structures? Follow up. You knew this was a higher high, knowing that if this market comes back to this area, are you getting and find support, it will continue doing what, trending back to the upside. Now, I think I should mark it down so that you will see the connection that the market has been clean, but you don't have the right knowledge or something before trading. That's why you are missing this particular trend. So you can see that I'm trending weekly right now, and if I connect it, you will see how close and sweet it is. Are you getting it? So it might not be, it will definitely not come very sweet to you. We know we broke the structure back into it. They will find, look at this is what the market will not tell you. Are you getting it? It's been trending perfectly well. So if I should take this thing off, we have another area of value here. Area of value is where your support and resistance meet. Look at, we have on that area of value. So the dollar was in an uptrend all the way from Are you getting July 18th till even September 19th we are right now? So just 3 months. Is it 3 months? How many months? July, August, September, 2 months ago, you would have gotten this trend where you would have gotten this particular daily structure that you're seeing here, perfect daily structure. So the market is trending perfectly well on the daily structure, but because you just focus on your 1 hourly chart to take trades, you don't even do your analysis to find out where your major areas are, your support and resistance, and the rest of them. This was a resistance, what's it called, support that broke, turn resistance here. So you have 5 touches. That's an area, very, very good area of value for you that you're looking for your market to find either reversal from or break and continue to the next major resistance. Also have a resistance here, we have a resistance here. So are we going to come back to these areas? That's where you should be taking your trades from. So if you've not taken a trade from here as a swing trader or a position trader, you're supposed to wait for anything that happens for the market to give you what signs to know what you're doing. So as you go to maybe the lower time frame, probably the 4 hourly chart, you see a lot of things happening also. So we're at a very particular area of value right now. So are we going to come down? The lower time frames will tell you. Trust me, the lower time frames will tell you. So if I drop today, probably there's a 4 hourly chart. I want to trend the 4 hourly chart right now. So I'll use a 15-minute chart to see whatever is happening in that 4 hourly structure. Are you getting it? So this is a 4 hourly structure. Hold on. I'm trying to bring this thing down. Look at. So if I take this off, look at something that's going to happen. If this market is going to continue, I think I should bring that back. If this market is going to continue and breaking structure back to these highs on the dollar, watch on the dollar. If this market is going to continue breaking structure to the upside and continuing this trend without changing character and switching to the downside, let me show you what will happen. This is what will happen. The market will actually, that 1 hourly structure that I showed you just now, the 15-minute structure, it will continue breaking to the upside. Are you getting it? It will continue breaking that 15-minute structure to the upside. Then retest on this structure. Are you getting it? Find a retest, and if it's not a fake out, are you getting it? You will know if it's a fake out. You will know on the lower time frame structure. So find your daily, your higher time frame structures, and use your daily to take the swings and make money from it. You can be a day trader out of that. You can be a swing trader out of that. You can be even a scalper out of that. And you can even be a position trader out of that. I would want to be a trader for a very long time. This is dollar generally. I'm just showing you. So what will happen in the multi-asset analysis? That's what I'm about bringing to your attention right now. It's a very critical area and it's a very good area of value, or you call it an area of interest. It depends on whatever you call it in the market. If you retest here, definitely trust me, we're coming down. I guess we're coming back up there. We're coming back up there. So if that's going to happen, we will find out in our follow structure. So what is our follow structure saying? Let me show you the follow structure. The follow structure is saying right now that we are at this area. So the market is still finding higher highs. I guess in this on that break of structure. So using this on a higher high. So until this structure breaks to the downside, I guess this is my follow structure. I don't trade less than the follow structures. Until this asset at this particular, are you getting the previous support, sorry, resistance, now turn support again, break to the downside and retest. We are not supposed to be doing what? Selling the dollar or buying Euro USD. Are you getting? So if this is my follow structure not playing out, that means the market is still what? In an uptrend, to continue trending and continue breaking structures to the upside. Are you getting? Continue breaking what structures to the upside and retest and find support again to continue to that upside. So watch this. This is very, very, very educative. I had to prepare my mind to do this for you guys. Are you getting? This is how I look at the market. So for us to know that this market is going to reverse, a lot of people will take what's it called aggressive entries from these areas to come down, believing that if we are to break and continue going back, even though we come down to this area, if we turn it into a support again, we might still continue. Dollar is still in an uptrend. So think before acting, before taking trades. What am I supposed to do? Dollar is still up in an uptrend until something majorly happens. So I'm going to transfer that right now into what's it called? Gold. So where are we on gold right now? If truly that you remember what we said already on the what's it called? On my previous videos. If truly this particular area will break, we're about to find out on dollar also. Remember, we're going back to 1938 area. If you watched my video yesterday, I was telling you that don't become liquidity. Don't let this market turn you to liquidity because of the structure you are seeing there, because the structure is meant to, deceive you. Sorry, the structure itself is meant to deceive you that this is what's it called? This is a double top yesterday. And I told you that until the market switches to the downside, the market is still bullish. Don't just FOMO and believe that, okay, because we have, resistance zone here, they're going to turn you to liquidity. Yes, that was what I was telling one of my mentees. Just a member of my community yesterday, that this particular area are liquidity, because he was saying that is 1930 a good resistance zone because we're finding resistance. Whenever you see weeks like this, they are liquidity. So the market will just definitely, if the market did not break and switch character to the downside, changing before we enter conservatively, we are not even supposed to enter. So how do you trend your market? Very, very important. So if truly this is, what's it called? Now look at, they've taken liquidity, they've turned a lot of people to liquidity now, because a lot of people took this particular 1930 trade thinking that the market will continue to the downside. Yes, it came back to a minor support area. But what did you do? Did you leave the market when you're seeing that we are not breaking below the market and take any profit you see? No, you are still waiting emotionally or sentimentally that the market will continue going your way. No, the market is still in an uptrend. The market actually, now let me show you something that is happening on USD right now. Remember, I think I should even bring it out. Let me bring it out. Look at Euro. Yeah, this was what? This was September 14th, which was 5 days ago. This was gold, what's it called? Gold euros. This was gold euro, right? Now look at euro now. The market was actually in a bullish phase on September 14th. Where is it? September 14th. You see that euros was, sluggishly consolidating. Now, money was flowing from euros into gold because of this gold euro. Now, this was the move that was happening that day, September 14th. Now, look at gold. Gold was supposed to do what? Come back. Look at this structure. That's the same thing you are seeing on what? Euro, USD right now. But you were trading what? Euro USD, thinking that, oh, why is the Euro USD sluggish? Are you getting it? But gold has broken above already. You see this money that made gold break and did this about how many thousand? 1914, 1915 to 1938 right now. This is about how many thousand pips? About 200 pips. You see these 200 pips that Euro USD did not do. That's because money was flowing from gold, Euro USD into gold. So always check the minor pairs or your exotic pairs. I don't know what is it, minor or exotic they call it, to see what is happening, to know the particular asset to trade. I was shorting gold on this particular day. Are you getting it? But immediately some of my stop losses were above here. Now see what happens. Market structure comes in right now. I gave an update that the market is supposed to do what? Reverse from this area to the downside. If you notice that particular trade, I said the market was supposed to reverse on this particular place to the upside because this structure itself. Let me refresh. Just follow up. You see how structures actually does what form before we can go into this, the multi-asset analysis properly. So, here's that particular asset I was checking right now. Okay, look at the asset. So this is gold right now. Are you getting? So the market was supposed to do what? Watch. The market was supposed to come back here because the market was trending to the downside with this trend after finding this head and shoulders pattern, we reversal at 0.5 Fibonacci retracement level. The market was supposed to trend and continue doing what? Breaking structure to the downside on the daily. But when it got to this particular demand zones, I guess this was the previous support. You can see this demand. It was a large demand that brought back here. So this was a demand zone. So don't play with even your lower time frame, your fully structured demand. When it came to that demand, it gave us a bullish engulfing candle. The next candle was small. But the next candle that came to this particular resistance was bigger than the last candle. Price action right now is telling you that I was not available. I would have seen this as a price action trader. Are you getting? I was not available. I would have seen that. I was not available that day, but I just knew that I had some trades at this particular. Are you getting it? I placed some trades down at this particular headings. Are you getting? I was not around. I think since on the 10th or something like that. I was very busy with something else. So I just placed some assets around these areas. Are you getting? They put some sales around these areas, and their stop losses were, I think, 1930 or something like that, thinking that we'll continue doing with breaking structure to the downside to continue this market downward. But losses now, losses must come. Losses must do what come, especially when you're not following or probably you don't know price action. Now, see what is happening right now. Gold actually did this, but Euro USD did not do it. You need to ask yourself why. That's because there was a multi-asset analysis that was happening. Money was flowing from euros into gold. Are you getting it? Money was also flowing from pounds into gold. Money was also flowing from pounds into gold. What action did you take on that particular day? Look at since September 14, right? Look at it. Even what's it called? What's it called? Gold, even USD tried, even USD did something to the upside. But GP was even sluggish. That means GP was the weakest for the past 1 week. Are you getting it? Now look at it. We're talking about EU GP right now. GP was the weakest because money was flowing from GP to euros at the same time flowing from GBP to what gold. So there was nothing happening on what's it called on GPUSD. That's because you didn't check your gold what's it called? Is it gold? You didn't check your gold euros, and you also didn't check your GBP you didn't check your gold euros, and you didn't check your euro GBP. Are you getting? So you have to do multi-asset research whenever you are in the market. Are you getting? Because a lot of people trade this euro GBP also. Are you getting? So sometimes when I see where the money is flowing from, that's why you see me trading. A lot of people have asked me that, why are you trading multi-asset? That's because I know that the money that is supposed to flow from, what's it called, that maybe I'm on a euro trade or a GP trade or a gold trade. I take the money that's supposed to flow away from this particular asset to this asset on their particular pair. So if I was here, I would have taken this trade knowing that this particular flow that flowed on what's it called on gold, I would have taken it from this movement back to this resistance zone. I guess in so to complete this consolidation, because we're in consolidation right now. Anywhere it breaks to is where you are going to. Breaks, change character to the upside, take all this liquidity and retest and turn this particular place into support again, then we continue going. Or breakdown, that's where I'll go and check the particular asset, because that asset will be moving extremely well. Are you getting? So this is what we have here right now. So what next? Watch. This is a daily structure. So we use our 1 hourly structure I told you about. So right now, what are you seeing? What are you seeing? Follow up now. We're doing the multi-asset analysis right now. We have a previous high. Are you getting? Now it has taken all the liquidity it wants to take. I've drawn this particular structure before that. It will come and take all the liquidities. If it's really going to go down, I know these markets, I know all these I see the liquidity concept. Are you getting it? To come and take all this liquidity, what is happening to my gold chart? What is happening? So I have to refresh again. I don't know what's happening. Just bear with me. This is I know, but just follow up, please. This is very, very important. Very, 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 very important. Very, very important going further. So that you can combine, and when most of your trades are going wrong, you should look at other pairs to know what's going on. First of all, I've looked at their other exotic pairs or their minor pairs to confirm what's happening in the market right now. So, and don't forget, we are still in this falling wedge. So is it clear on the falling? Let me see. We are still in this falling wedge, and this falling wedge has a lot of confluences. And what are the confluences? you would have not been caught into this liquidity that happened. You would have not been used as liquidity because definitely this was the high of the falling wedge. Are you getting it? Should know that there's something that's liquidity, what's it called? Manipulation is about to do what happen. You should have known on the 1 hourly chart that manipulation was supposed to happen. Are you getting it? With this liquidity concept happening here, because the higher time frame does what supersedes lower time frame. So if truly this market wants to, break and continue going to the upside, it's going to show on the 1 hourly chart or the lower time frame also. But you were used as liquidity because you don't do multi-time frame analysis also. Or you just know how to trade this. Look for your support and resistance on your lower time frame. They will fail you because you've not done a proper check analysis on your higher time frames before going to the lower time frames to trade those support and resistance. So when you say, oh, I took a trade and it failed, you did not do a higher time frame analysis before you took that trade. So I saw these that we have not gotten to the head, as in the higher, what's it called? That's why I told you that, trust me, this market is not going to come down from here. Are you getting it? They are going to use you as liquidity before coming down. So let me do that again. Look at what happened. This market came back here, came back up here, then came up here, took all these liquidities out. A lot of people are putting their stop loss underneath here, then to continue going down. Again, this was where I drew yesterday. That's if we continue, if we do not break this low right now, if we do not break this low to the downside, and we still even have that's the resistance zone. Let me zoom very well. So let me take this off. Now look at what you do. I want to transfer what is happening on gold right now, even though we've done a gold euro. I want to transfer what is happening right now because they have all balanced themselves to find our direction right now. So we have two major places on the 1 hourly chart. I guess so. First of all, remember what happened. Remember what happened. Don't get carried away. You still have your minor, breaks that happen. And this was a falling channel, and the falling channel is what? A bullish continuation pattern back to the previous zone. So this was where the market actually reversed from. So we have to go back to that particular area. That's where supply is. When it got to that supply zone, what is happening right now? This was not your supply. There's no supply around this area. There was no supply. This was just building liquidity to take them out back to the supply, or you call it a fair value gap. I called it a fair value gap before what going downwards. So if it's truly going to come downwards, we will know. We will know. Are you getting it? So how are we going to know? Your lower time frame trends. So remember, this was a previous resistance area that has not turned support. Are you getting it? So as long as this market is not breaking the support and continue breaking to the upside, we've broken above 1940 then. Are you getting it? Probably even break to 1950 or 1960 area. We test that 1940. I'll show you on the higher time frame. They continue going. And now let's use the same thing happening here right now. Because it broke down does not mean that we've changed character. This can still stop it because this is a major support. That's a minor support. This is a major support that is happening because we have the support. If this market still come down here, you are to only buy from this sort of areas if you want to really buy. That's if you're seeing some sluggishness happening in these areas before buying. So that the market actually broke this, are you getting it? Or done a head and shoulders pattern also and broke down and continue going down, you should continue selling from here. Consider this particular area as support also because it's a 1 hourly chart. They tend to do whatever they want to do. So if I should transfer that to Euro USD, no, probably before then, let me go to the daily charts and show you something, or probably the 4 hourly chart and show you something. Now, listing. I know we have been talking since, and you might have been carried away in some extent. Listing. Let me take all these guys off first, even if you don't even know how to trend your lower time frame. Let me take all these guys off first. Let me take all these guys off. Now, should I even take this off? Yes. I might bring them back, but hold on. I really, really need to do this for a lot of people in my community. Are you getting so? We say that this is a falling wedge, right? This is a falling wedge. Get the sense of whatever you're trading first before you enter a trade. This is a falling wedge, which is a what? A bullish continuation pattern. It needs to show you something that the market is exhausted, right? Now, it brought back this, it brought this, now it's brought this now. That's a triple bottom for you, some as in for market traders. And I tell you that gold does one thing, either an M pattern after taking liquidity or a W pattern. Look at it. Go and find that. Go and read about gold. Only M and W pattern, that's what it does. Double top, double bottom, double top, or triple top, triple bottom. That's what gold does since it has been trending. Are you getting it? It has been trending. Look at all the trend. This character. Go and find the character of your particular asset before you trade. Are you getting it? This is the character. GP also has his own liquidity character. Also, Euro also has his own liquidity character. So I'm just showing the character. Now, in this falling way right now, it's going to reverse from a particular zone. Now, bring market structure inside. This market was trending to the downside. You will find 0.5, 0.61 is breaking structure. But when it got here right now, it got exhausted. So if you're ever confused with your candle, switch to the line chart. Switch to the line chart. You'll now see things clearly that all these emotions you are running, you'll now be seeing them clearly. So for us, all these sharp corners, they are reversals. So if you're ever confused if you have to take a trade or not, these are sharp corners. These are your reversals on your line chart. Are you getting it? Once you start seeing them, know that the market is going to the either direction. You know the behavior of your market already. I believe I did a video where I talked about all these W patterns and your, what's it called? Your W patterns are your M patterns on gold. So on this chart, line chart right now, what can you see? There's no more red and green candle here right now. So there are no emotions on the line chart. For this market to get exhausted, instead of breaking and continuing this, downtrend movement, but this is supposed to be the downtrend, continue breaking, retest, and continue going down until it gets to a particular other block zone. But right now, it's telling you that I got exhausted here. That is, remember, all you have been expecting since is what? That this is a falling wedge and is a bullish continuation pattern, a bullish continuation chart pattern, or you can even call it a flag, which is a rally-based rally. Are you getting it? So you have to have the sense of what is happening before you take trades so that it can boost your confidence and tell you what is happening in the market. So if you're ever confused, use your line chart. So as long as this market has, found this, exhaustion here right now, it's telling you that I want to do something else. So connect your dots. My first dot is that I have a support here, I have a support here, I have a support here that broke and turned, resistance, this resistance, then reclaimed it again, came back again, turned it to a support, but broke and turned resistance. Now we came again, faked out, turned support again. Now we are here now. What are you seeing? What are you saying? Now, since this market is exhausted and is finding exhaustion, that means our bullish continuation pattern is about to do what? Prevail, right? Our bullish continuation pattern is about to do what? Prevail. Are you getting it? So if our bullish continuation is about to prevail, it's going to show you a lot of signs again. What can you see here? I have to connect these dots because as long as I have the sharp edge, I just use my trend line to connect the dots. Whatever pattern it shows me is telling me that, okay, let me trade that pattern. What pattern can you see? This is if I should even take this off first, this is now a ascending triangle. An ascending triangle is a bullish continuation pattern or a bullish reversal chart pattern back to the upside. Because this is exhaustion. And that was a falling wedge. So now it's showing me the same thing I showed you on USGPY, how USGPY found the same thing to reverse and continue trending to the upside. So let me, if I can probably bring that back for this video not to be too long, I'll show you. So if you're ever confused, like, oh, how does this market work? Go and check other assets. These things trend perfectly well for you. Go and watch my last video, probably on my phone. You will see what I'm trying to explain here. Are you getting me? Because this market was on a daily bullish continuation pattern, which is what your what's it called? Look at daily sweet entry again. We broke out from a what? We broke out from an ascending triangle, and what is the phase, as in where will it trend to if it breaks out? Look at exactly. It got here and reversed, hit the target it wants and reversed. Look at the target. It will hit the target and reverse. Look at, go to the target and reverse. So it has completed that phase. So after that completed that phase, after getting to that target, take profit and wait for a retracement. It came back, are you getting it? And continued again to the upside. Are you getting it? Continued again to the upside, back to this supply zone. So are we at the supply zones already? This is a supply zone. Are we exhausted already? When the market is approaching a particular demand or supply, you now start seeing all this sluggish movement. There will be no longer much buyers until something does what happens. Are you getting me? But since the reversal chart pattern on the weekly, that means that UAJPY is still bullish, because it might have done or Fibonacci retracement zones and has completed right now. Maybe you want to find a retracement before continuing to the upside. That's where you now start seeing all those fundamentals coming in from those news, and you start saying that, oh, if I had known, I would have bought this fundamental. Use your fundamental, sentimental, technical analysis, combine them also. We are back to gold. So I'm just trying to show you something right now. Even on the 4-hourly chart, you would have even seen this particular trade happening. You know that the daily chart found exhaustion here. You've connected one dot, connected two dots, you connected three dots. You were still trying to sell to the downside. There's something wrong with you. When you're supposed to, know that your higher time frame is supposed to supersede your lower time frame. Even in the lower time frame, the market found something on USDJPY. That was what I was doing that time. Go and look all this, my USDJPY. I think my USDJPY general analysis. Go and look my USDJPY March analysis. I was talking about this particular, ascending triangle even happening here, where the market was trending to the downside. Are you getting it? But actually broke to the upside, came back to this resistance and found resistance. You must find the second resistance, whether I like it or not. When the market is coming back to a resistance, you must find a resistance. Take this on to the under key point again. After finding a particular area of value, are you getting it? The first break you see, are you getting it? When the market wants to come back to that particular resistance. Now, this was a switch to the downside because this market was on the uptrend and switched to the downside with this. Are you getting it? This was a switch to the downside. So, sorry, this particular market was on a downtrend, remember, and switched to the downside with this and found this particular trade. So for it to continue going back up again, it will have to switch back to the upside. But this switch will definitely come back to this particular area. I'll take a trade because that's the second one. Second one will surely go. So it came back exhausted again, couldn't continue breaking structure to the upside, but instead going to the upside. So that's to tell you that this market is bringing a bullish vibe inside an ascent triangle, which is a bullish reversal chart pattern to the upside. So it broke out and retested and continue to the upside. So this is on that trade again. If you are a market, as in price action trader or a chart pattern trader, whatever you might call it, and the target of this particular, what's it called, wave that you can see here is this one. So if you have taken this trade, you have taken a trade from 133.5 or 0.6 or 0.8, anywhere you want. Let me just say 134 to 137. That's 400 pips to the upside. You have taken this particular trade and wait to get to his target. He went to his target and you found a daily, what's it called, support, daily area of value resistance. That was what brought it back into the 4-hourly, support again. And still found a double bottom around that place and continue moving forward. So how have you been looking at your market? Now, I've even done USJPY here right now. So I'm showing you how it works on gold. So since it's finding exhaustion, like it found dead on the, what's it called, the USDJPY, and bringing a bullish vibe, this is what buyers now look into. Are you getting it? To buy to the upside or continue to the downside. So right now, I am confined inside. Good is saying that I'm confined inside an ascending triangle. Are you getting it? Which is a bullish continuation pattern. So you are never supposed to trade around this area. Wait for either of them to break, because these are what the market uses in moving from one phase to the other. So let's transfer this right now. Since we are getting a bullish vibe on gold right now, and the overall vibe is that gold is going to go back to the upside because it's inside a bullish continuation pattern bigger since the month of what? March 21st. We have been on this phase, a bullish continuation pattern to the upside, and it's showing us a minor bullish continuation pattern to the upside. So any break above this area of value, which is how many confluences are you getting now? The following wedge, you're getting a bullish ascent triangle vibe, and you have an area of value also that is a previous resistance that whenever it breaks to the upside and retest that particular area of value and turn into support, we have to continue buying to the upside. So you're not even supposed to buy until this break happens. And also the fifth confluence and exchange your character happening, retracing just to 0.382, are you getting from where you started from? So probably it might come down so that you can get the 0.382 retracement to continue buying massively back to this what resistance zone that we had on the daily. Are you getting it? Resistance zone that we had on USGPY daily before. Are you getting it? Before coming back to that particular 1940 again and still finding support, then we continue to the upside. So I'm combining multi-asset analysis for you to give. That's what gives me my boost and confidence to leave my trade to run for 2 weeks, 3 weeks. So transferring what you're seeing on gold into what? Into Euro USD right now. Let me show you something now. So this is Euro USD. Euro USD did not perform what gold actually did, what performed. Why? Because money was flowing from Euro and GBP into gold. That was why gold moved faster than this whole thing. So look at now. Don't get carried away. So I think I should take all these guys off and show you what I can find. I usually do what? Just use my multi-asset analysis or my structures, my chart patterns or my price action patterns to trend. Now I know I have one touch here, I know I have another touch here, I know I have a third touch here. So I put my trend line to it. I don't care. I just connect my dots first, then look for my major support and resistance. Now, this was what I was expecting. Remember, it was what I was expecting on what? Euro US and sorry, gold on the 1 hourly chart. Remember, look at the same thing that where gold is, where Euro US is right now. Same thing. Look at. I was expecting that when gold gets to this area, I had some snipers entry here, sell entries, but it actually did what? Consolidated, broke above it and consolidated, a bit. And this was a 4-hourly move that happened. Just one 4-hourly candle took all my trades out even before I could, come back and see it, and because I was not available. So it brought back this bullish vibe for gold that, okay, I've broken a structure to the upside. I've even taken at the extent of even coming back here and even use that power to take liquidity back to the falling wedge on the daily chart. I don't know if you're getting it. So Euro US is still here, but gold has gotten about 150 pips or 100, 200 pips to the upside already. Again, so look at Euro USD right now. So what I'm expecting on Euro USD right now is that it will do the same thing and go because that's taking all the money it wants to take. So we are at the same point right now, even though it has moved more than that. So look at Euro USD right now. Let me expand it more, even on the 1 hourly chart. We know that Euro USD were at a particular area of value with a particular support area that is now turning into resistance. And there are other things you can still also do to find out whatever is happening. Look at, let me show you. We are confined where? Inside this minor falling wedge channel, which is a bearish. We are still bearish. This was a previous support that turned resistance. Now it came back, turned resistance again. This was your sell back to this structure to break. You can take this sell, pips, about 50 pips or so, or even take it down because it has shown you where it is going to if you bring your Fibonacci retracement to. So how many, or what's the knowledge? Trading is a university. You go to university to go and learn surgery, right? You go to university to go and learn surgery. You would have known that if you have entered this trade from the Fibonacci retracement tools from here to here, because we broke the structure to the downside. This is 0.0618 Q zone. These were only the places you are supposed to sell with your stop loss above it and trend into the downside. And if you bring your target in You see that it go imperfectly to that target from here to here, even went further over 0.786 to 1. So if I've taken this trade, I would have taken my, 550 or 750, let me just say 750 entry. I'm taking profit at 672. That's about 90 pips or 80 pips or so. That would have been a very good trade. Now, what is happening right now? The market is back to a particular resistance zone. What is that zone? This was the previous high. This is another high. We are back to 0.618 Q zone again. So this is on that sniper entry you entered here again that is telling you that I'm continuing to the downside. So for you to know that it's going to continue to the downside, even on the 1 hourly chart, the market is trending perfectly well for you. Even on the 1 hourly chart, we know that this is a particular resistance zone also happening at 0.618 Q zone, which is still a downtrend. You are still scared of selling. And let me show you something now. Again, look at the old chart patterns are there to guide you. This market is coming back sluggishly back into this resistance zone. The previous support now turned resistance zone again. I guess that's why you are finding this bearishness happening here. And because it's sluggish, the price action that is using to come back is even sluggish. It's not even bringing those big candles you were seeing on gold. Look at, let me show you something. What do you see on gold on the 4 hourly structure? Are you seeing the green candles give you a bullish engulfing and also brought all this candle? Do you see a red candle? But when we go to euro, sluggish 4 hourly structure. See, green, red, green, red, 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 green. When come red, red. This market is still bullish until something about to show you now happens. And what is that thing? You just connect your dots. Use your line chart, your lines to connect your dots. Are you getting it? This market is in a rising wedge, which is a bearish continuation pattern to the downside to corroborate with what is happening here. Drop, came again, drop. Are you getting it? But the moment, listen now, the moment this happens, are you getting it? The moment this happens, this is what I'm showing you right now. The moment this happens, knows that you can still even you can still even trend your 1 hourly structures. Look at this is support and resistance, minus support and resistance on the 1 hourly chart. The moment we are not breaking below this particular support, are you getting it? Are you getting the moment we are not breaking below this? Anything that will make this market to reclaim this particular support and resistance, I'm buying gold. Because gold is faster than Euro USD right now. Remember, money is still flowing from Euro USD into gold because gold Euro structure is saying that the market has switched and is continuing what? Market has switched and is continuing what to the upside already. So it's either I will buy this market, are you getting it? Or I will just trade. It's either I will buy this market or I will just trade gold. I'm buying gold because gold will definitely come and reclaim and continue going like it's doing on what's it called on gold and gold and euros right now. So I'm using euros to see what is happening in the gold chart. I will also apply to GBP USD also. So watch out for this. Let me take all these things off. Watch out for this right now. So it's either I am buying from here right now, where you are right now. It's either I'm buying from here or the bottom itself. It might dip down, but we are not supposed to break below. Now, I'm not buying below here. I'm supposed to buy from here. If I want to take an aggressive entry, I'm supposed to buy from here because it's still inside this rising wedge. So 60% of the time, it's supposed to break and continue its trend to the downside. Look at it. Remember the same thing it did here. Remember the same thing it did here. Remember the same thing it did here. Rising what? Channel. And did what? Continue breaking to the downside. A rising channel is a bearish continuation pattern to the downside, changing character, breaking structure, came back to 0.618 Q zone again. So are we going to continue breaking to the downside? Are you getting it? Are you seeing how the market trends? So you're supposed to know have the knowledge, basic knowledge of everything, your areas of value. Are you getting? So look at now. Remember, Now we are doing time frame analysis. Remember, don't forget this. Remember that gold is giving us a bullish vibe in gold euro. So since we are still in this ascending channel on gold, I get it. I believe, I'm getting to believe that even though gold come down, gold will not come down more than this support. So if gold is not going to come down more than this support, apply it also that Euro USD might come and do a double bottom and just switch and break structure to the upside, reclaim this particular part, might not come down more than this. So if you are taking a sell, if you've taken a sell from here, please get out of here first. Get out of there first. Go and watch my other videos to corroborate this so that I will not speak, I will not start going backwards to go and show you why I said you should get out of there first. So if we are going to continue this bullish, bearish continuation pattern like it did here to the downside, are you getting it? Get out of here first, because the market might get exhausted here because of what gold is about doing and getting exhausted here, and continue to the upside to complete this, bullish continuation pattern on the rising wedge. Because the moment we are breaking below this, trust me, trust me, we are breaking out of this rising, what's it called, ascending triangle right now. That means that we are to continue to the downside. So it's either we are breaking up and going to 1980, I guess in 1930 to 1980, or we are breaking down and we are continuing this market from 1900 area to 1850. So it's showing you what it wants to do right now inside an ascending triangle right now. So I should take this thing off. Is either we are moving from this phase to the upside to what's it called, 1930 to 1980. We are selling from 1930 to 1850 back to the bottom of this word falling wedge area. Not even the bottom. I say I gave you wrong. That we are selling and continuing this market back to the downside to confirm to us that this market is still what in a bearish phase, and this was just to take a lot of people out of the market before continuing this market to the downside. So this is 1860, 1850 area which I've been telling you about. So watch out. That's why I said this area we are right now is either you are selling from there, put your risk to reward to it, or you are buying from there. So if I should take all these things off, hold on, show you something. If I should take all these things off, the target is either you are selling from here right now, I get into you are buying from 1930 to 1980, put your risk to reward to it, or you are selling from what's it called? You are selling from the break of structure of this. And what do you mean by continuing to the downside? Remember, we're in a minor uptrend. So to continue this market is going to break and switch back to the downside. Are you getting the switch this market? We test it 0.5. Are you getting it and continue breaking structures to the downside? So because you are seeing a minor uptrend, because of your lower time frame, does not mean that you should not go on your higher time frame. But if this happens, that's when it's going to bring us back into these demand zones. Look at to correspond, to definitely correspond. I guess it depends. It bring us back into the demand zone and continue this trend, because right now, look at, we had the 0.5, 0.618 daily or 4-hourly, anything you want to say it, retracement to the downside, which we found retracement on the higher time frame. We came back, I guess we broke structure to the downside with this, right? They came back to 0.5. We found again, but a minor, bulls are trying to see if we can go back. So we are at a minor resistance zone on that supply zone you are seeing on the 1-hourly chart. This is a supply zone 0.5, 0.618. So that's supply, whether I like it, that's supply. So if you find supply to continue breaking and continue going downward, and the target of that supply is what? Bringing your Fibonacci. So trading has a lot of knowledge you have to acquire. A lot of knowledge you have to acquire. You have to acquire all this knowledge and bring it to your notice right now. You have to acquire the knowledge from your candlestick, from your pattern, price action, market structure, your master or your market structure, everything, your manipulation process, what is it manipulating you, your fundamentals, look into your fundamental analysis. I don't look into fundamentals very much. That's because I use my multi-asset analysis that I'm doing to find out where the money is going to flow from. Because if there is news coming out from euro, money is going to flow from somewhere else into that particular asset. So when the fundamentals are coming sometimes, my structure is already telling me what it wants to do. I know I have a trade from 1942 and 1938. I have not still taken profit. I didn't even put it at break even. My trade, my stop loss is above here. So I'm still counting and focusing on these sales because this market is actually what trending to the downside, breaking structure. So this is still my entry, and my entry is still valid. 1938 came back. I was in 250 pips to the downside already. I didn't take profit. I'm still in that trade until it validates to the downside. So I don't want to enter and leave and enter and leave. A lot of people are saying that why don't you take profit around here since you are seeing a break above 1916 already? I said I don't want to take. I am a swing trader. I am not a day trader. I don't want to start looking for entries again or FOMOing and start losing my confidence again. I know my trade. So if this market is supposed to trade to the downside, I'm supposed to know where it's going to go to. I get in, put my Fibonacci trend extension here and put it here. So we are coming back to 0.786, which is at the bottom of that wedge. So from 1930 to 1972 is about how many thousand pips? Is about 1930 is 300 pips, 1970 another 300 pips. I get me. So 19, let me just say 580 pips I've been clambering on, or even come to 1851 before finding demand to go to the upside. So this area is key. So if that's going to happen, that is going to break down, continue breaking down. That means euros will continue breaking down also. So this is what I wanted to show you. Euros will continue breaking down also, and even breaking and not turn yet into what an area of value. So leaving the 1 hourly structure, I'm going to show you something. Leaving the 1 hourly structure to your high time frame structure since we are trading daily. So I'll go to daily to find out what is happening because euro is still what bearish. This is definitely liquidity. It has not taken it. I don't care. It has not taken it. And it has broken out from the euro falling wedge. I see it on a dollar. Are you getting it? It has broken down. Dollar is still bullish. Dollar is still bullish. Don't get me wrong. I'm not saying that as long as dollar is still bullish, dollar is king. Dollar has to switch to the downside for me to believe that this market has switched to the downside. For euro itself has to do what? Switch to the upside and not find resistance here. The same way I don't want gold to find resistance here and continue support here and continue going to the upside. Again, so I will only be convinced if my higher time frame structures are just liquidities and it continues breaking down to the downside and retest, then I can start selling the dollar and start buying euro USD. And what do I mean by that? I don't want it to come back into this resistance zone because we've broken out of this falling wedge as in triangle right now. We're testing it, finding trades from here or these particular areas and finding resistance around here like it did continuous market back to these support zones. Are you getting? So the same thing I said here, if it does same thing it does right now, continue breaking structure to the upside, it will take us back here, back to the upside, which is here. So it's the same thing like I'm giving you on euro right now, to take us back here. So watch out for your most important areas of value. I might have spoken very largely right now. So let me transfer it to what's it called? Let me transfer that to your daily structures of your GBP also. So your daily structure of your GBP is still saying that, okay, we found what? Look at, it's there. We are at a very important area of value on GP also. So multi-time frame analysis is giving me what heads up that this market might actually come back up here. Are you getting it? Because it has been trending to the downside. Look at it. It's trending perfectly well. Perfectly well. So we might trace back to these particular areas of value. You have it there. Yeah. Let me go to the follow chart so that I can clear. This is a particular support. Particular support that broke and has turned to what? Resistance right now. So we might travel back all the way to these areas, to these particular areas. Look at, we might travel back to these particular areas. Then if you bring your Fibonacci retracement tools in, this was your last lower high. This is on that lower low. Sorry, I think I picked the wrong. Look at. So if we're retracing, that means we're retracing back to this area. So the market is always showing you where to sell from, where to buy from. So if I'm even taking how many pips? 19. Let me just, I entered from 95, I think something like that. 95 to the bottom, which is 60, what do you call 62? Let me just say 40 pips stop loss. I'm taking over 250 pips trade. That's a 5 to reward ratio if it plays out. So if it does not play out, no problem. Because I know that we are at a particular daily support zone. So if I take that trade and it plays out, no problem. But I just want to enter my trades from a particular areas of value. So I'm not using just GP to GP the economy or GP fundamentals to take my trades. I'm also relying on what is happening on Euro USD. I'm also relying on what is happening on gold. I'm also relying on what is happening on gold euro. I'm also relying on what is happening on what's it called? All my other USGPYs and other pairs. So I said I should bring this to your attention, tell you that trust me, this is how I trade my market, and this is what has been working for me. Because I don't just do uh, what's it called? Single, just a multi time frame analysis. I do something called multi-asset analysis also, knowing that if this rejects and continue going down according to what has been happening, gold will also do the same thing. These areas, gold will also do the same thing. These areas and continue going downward and even break further because this is a resistance zone. This is a major resistance zone we've had more than 1, 2, 3, 4, 5, 6, 7, 8. Now 9 is enough to let you know that that area is very important in this gold chart. So if I continue to the downside and each of the assets that flows, even no matter how it flows, as long as it's going to go break below this, gold will also break below it. Then GP will also do what? GP will also do what? Break below it and take all these liquidities out. There are liquidities here to take them out and come back to these demand zones. I guess it come back to this major demand zone because we're still trading in between this move. I guess we're still trading in between that move on the daily. So I don't want to add sentiment. 40 pips, no problem. I have my risk reward, risk and money management intact. Even if I lose a trade, it's about 250 pips. It goes well. I guess it. So don't trade against the trend. The trend is your friend. Stop trading against the trend. So even though you take a trade right now from this sniper entry 0.5, 0.618 kill zone, are you getting it? Put your risk reward to it because you know you're not just using sentiment to trade. You know this is a proven system that has worked and this is what the market uses in trending. So if you put a sniper entry 0.5 or 0.618 and you're in profit already and it comes back and take you out, you have enters in you flowed with the system that works, not what you think, not emotions, because you know that definitely this is how the market does move, break structure to the downside. And this is a bearish continuation pattern since the market is what? Bearish, drop, sluggish movement, drop. Anything continues doing, just follow what? The trend. Market says what? The trend is your friend and it's even happening at a resistance zone, even though gold did not continue that. So you should know what and how to use a multi-time frame analysis from now. If you don't understand whatever I've explained, I think you should watch this video over and over and over again. Don't kill yourself trying to trade every day. If you use a lower time frame to trend your market, trust me, you will definitely kick an iron. Stay on your 4-hourly structures. They will tell you whatever they want to do. They are trending perfectly well on your 4-hourly structure. The 4-hourly structure trends perfectly well more than your lower time frame. That's why I'm a swing trader because I want to give the market gives. I've been talking for like 30 minutes right now. A lot of people just want to enter. I think the market gives you sometimes 3 days to prepare your entry. 4 hours, the lowest it will give you, the lowest the market will give you is 4 hours. 8 hours a day, 2 days to prepare your entry. And this is what? The 4-hourly structure. What are you saying here? To me, there was a rejection back from the upside on this particular resistance. One bias Second bias, a bearish engulfing. Third bias, if this candle in 1 hour, 2 hours time, 1 hour 59 minutes, close bearish, it might even break below this rising channel, which is a bearish continuation pattern that is breaking right now. Are you getting it? And that makes it break below it. Are you getting it? And retest on it. Again, that broken structure, this is a broken structure. Retest on that broken structure. This is on that sell for me to come here or continue to the bottom of that resistance, what's it called, support trend line, coming all the way from the upside. Are you getting it? Coming all the way from the upside, or even take my profit here. It depends. Are you getting it? But from here now, this is a minor support on the smaller time frame, 1 hourly chart, that might switch this market to the upside. You're getting it? Do sluggish the way it did on gold and continue from 9,700 to 800 previous, previous is 800 previous. That's on that 100 pips. So where do you take your trade from? Where do you take your trade from? What's your risk to reward? What's your stop loss? Are you using a higher stop loss and it goes back and kill you, or you have to leave that market? Because right now, on this trade I've taken right now, I'm even, getting the bearish vibe already on my gold, on my Euro USD. I'm getting the bearish vibe already on my, gold chart also, finding resistance and, getting sluggish there. So I don't even need my stop loss to come and hit sometimes before I leave this gold chart I'm on, because it's just probably 4 pips or 5 pips away from my entry. I entered at this particular 1.396. So I'm getting those bearish vibes on gold and what's it called, and Euro USD, anyone that is breaking down, I guess, from that particular support and resistance. And gold is not, as in JP, is not giving me a clear because it's consolidating and weak. I guess I might leave it and get out of that market just for people. So I don't need to wait for the market to continue breaking down first. I guess before I will know that I'm supposed to leave. Now is a consolidation happening for the past how many days now? Since Friday is a consolidation happening there. So I don't need to leave, and it's still bearish to me. So I'm just anticipating that the market was in this phase and is getting exhausted on that support. So I know JP for one thing. JP also loves liquidity like gold. Are you getting? So is JP going to reverse from here? That is what we're contemplating right now, because yesterday was a doji. Now, see the reason why I entered that trade again. Yesterday was an indecision day. So an indecision is a exhaustion of sellers. So are we going to get a morning star? Because I would really love to see a morning star here. And what do I mean by seeing a morning star? I want this market, close from here. I want this market to at least go above 0.5 on this close yesterday. I guess I want this market to at least go above 0.5 or 0.618. This whole candle on the 3 days ago. I want this market to at least, close above here, close above it, and continue the next day candle above here, green. Then I'll be happy that this market will definitely go up. So there are a lot of ways why I wanted to close above the 0.5. The previous 3 days candle. If you can close above that 0.5, because I'm measuring the previous 3 days candle now with my Fibonacci retracement tool, I wanted to close above half of it. So I can use my Fibonacci to measure what is happening on that candle, opened and closed. The candle opened here. Are you getting it? Came back up, came down here, and closed here. So I want this day to close above at least 1 point, where I entered from, 1.2395. If you can close above it, even get to 1.400 and close above it today, I know that bulls might come in and take the tomorrow's candle green. If you can give me green, I know that we have closed above the previous 3 days sales. I get close above it, then I will enter more trades around this area. My stop loss underneath here. You know that I have a 150 or 200 pips stop loss that will take this market back to where the previous supply zones. I guess so. We can take this market back to the previous supply zones. If you find supply and continue back to the downside, find support again, we're coming back to the upside. So this is what we have right now happening for gold. So what knowledge do you have in store for your trades? Very, very important. A lot of people need to start from the foundation. So this is just the reason I took this trade, because of this doji. And this doji might not work because the day is about ending. How many hours we have for the day to go? Just 1 hour 54 minutes remaining for today to end. So it's about turning into a bad trade for buyers because there's no buys happening today. This is just too small for me to get a morning start because I need a previous day candle red. I need a doji. I also need a very good, buy candle. Even though it's at least to 4,600, close there so that my previous next day candle can be green. Then I can start, when the day is closing and I'm seeing a green candle on the next day, I get in tomorrow, then I can start, putting my risk to it, my stop loss below it to take my trade to the next what? Resistance zone. But if I'm not getting it and turning this into liquidity, or if I'm not getting it, trust me, I will leave that trade this night before the Asian session will open tomorrow in the midnight and come and, liquidate me because the Asian sessions are meant for liquidation. Liquidate me and take this market back to the downside like it's doing on gold. So if gold is going down, USD is going down, trust me. If gold is breaking this particular support as it's doing right now, trust me, and reclaim, break above this resistance. I guess trust me, the pounds will also go up, break above, retest it, and continue going up. Pounds will also do the same thing. I guess that continue going up. Pounds will also do the same thing and continue doing what? Going up to the next resistance. Gold will also break above. Are you getting it? Gold might also break above this. Are you getting it? Retest it and continue to 1980. So gold is 400 pips. USD is about how many pips? USD is from 969, 700 to 800. USD is 100 pips. Are you getting it? Remember, money is flowing from USD and GPUSD into gold. So gold is 400 pips. Don't be jealous if you're not trading gold. Then that's what you're supposed to find out as a trader. Are you getting it? So if I'm taking an entry right now, I'm taking this entry, put probably a tighter stop loss of like 20 pips to it. To the downside, or probably a 40 pips to it. Again, so that in case it dips a bit before going up, no problem. The proper stop loss to it. And on gold, I guess I've shown you what to expect on gold. Go to your lower time frames because it's a daily structure. It's trending on your 1 hourly. This is a daily structure. It's trending on your 1 hourly. Look at, for these structures to be invalidated, we need the support to break. We need that support to break. So break this support to the downside. Are you getting it? But don't find support again on the major area of value. Because if you still find support on that major area of value, it still has tendency of what? Moving to the upside. Still have tendency of moving to the upside. So this is what I have for you today. Don't always forget your area of value. Don't always get carried away or forget your area of value. Very, very important. You knew what has happened that now I've known. Remember I told you I was on that trade, but I was not available. I just set some, what's it called? I just set some trades and left it to run. It picked those trades and liquidated me. I guess in it. It picked those trades and gave me a loss all the way to 1930, 1932, what's it called? Resistance. But I think there were some little, what should I call it? There were some little, sure, stop losses I put above. So I wasn't watching. I didn't see this. Trust me, I didn't see this. I didn't see this also happening, breaking above and closing a 4-hourly candle above this support. I've seen this candle close above this particular support, or I would have left earlier, 1920. That would be minimal. Well, at least I think 100 pips stop me out. I'm making profit before, so I don't care. So is this truly a change of character back to the upside? And not just what's it called, a manipulation process? I guess we know because the market will either come back down here or come back down here to find supply as in support again because it was the previous support, turn resistance, now turn broke this resistance again to the upside. So is it coming down here to find support to continue breaking structure to the upside? You're about to find out. So your non-trade zones are these areas to the downside. Are you getting it? Or let it break above first. We claim 1940 on the daily structure before you start what? Buying. Before you start buying, trust me, don't buy. Don't even buy. Don't even try to buy from yourself. Let it reclaim this 1940 daily structure before you start buying. Because this is still the full chart. Anything can happen. You are buying through the Asian session. Don't trade Asian sessions. There are manipulation times and manipulation process. I get me. So if this is going to happen, it's going to give rise to make your ascending triangle meaningful, knowing that we have two areas that we cannot, remember, we have two areas right now that we cannot break to the downside. We cannot break, we can break this, but we must not break this to the downside anymore. But if we break that, we see have just a minor support right now happening here, minor demand happening here. I guess this is now demand happening here. So come here and find that demand, no problem. So I think I will sell, but if I don't have to, I don't have to be involved in this market, in this whole market to this particular area. I don't have to be involved because anything can happen. I don't have to be involved. I'm protecting my capital. So even if it takes 1 week to happen, I can wait. I don't trade this on certain market. Anything that is making me have both or think twice, I don't trade that market. So this is what I have for you. This is a very long video, but trust me, it's worth it. If you watch my videos very well, it's worth it. I gave all these trades. I gave all these US oil trades. US oil trades, June, July. You have done 16,000 pips. I don't joke with my market. I guess so. I've just done a multi-time frame analysis for you, and you see how Bitcoin also has been trending from $25,000 area. We are $27,000 right now because this was a major area of value where you know that to break this definitely. Why didn't you take it? At least take a trade, even though you're going to make a loss. You've made $2,000 right now if you had one Bitcoin. $25,000 is support. This is support. This was a previous resistance. Now turn support. You can still take a trade. Take your $2,000 out of it and leave. Are you getting it? Because this was support. So only trade from your major area of value. Are you getting it? Now you found $2,000. Where were you? You didn't take it if you're a Bitcoin trader because you are scared that this market might continue going down and you lose money. Why do you then are you trading if you are free to lose? So I believe with this, my few points, I've been able to, make you understand how this market actually does with trend with a multi-time frame analysis, using a multi-time frame analysis as a case study. This is how the market does with trend. I'm a swing trader. That's why I don't even want to get involved until I see a proper break out of my higher time frame areas of value. I get out of my higher time frame structures, out of my daily structure. If I don't get those daily, bullishness, I'm not trading because this market is what still bullish. So if I'm even getting a red candle and look at the price action, look at the price action. This was a shooting, what's it called? A hammer. This day, which was what? On the 15th was bullish. Friday was bullish, massively bullish. Then came back and gave us a morning star. Now we got a bullish candle again. There were no sellers yesterday, also Monday. Are you getting? There were no seller yesterday, Monday. Today is Tuesday right now. The only sale we can see is this one. So what makes you feel like if you're not getting a morning star, an evening star back again to break below this? Huh? What makes you feel that? And even after the evening star, see, remember we had the confirmation of a morning star with a green candle. Now I need another evening star. I guess I need an evening star with a green candle to break this also the same way it did here for me to be convinced to sell. And I have confirmations because before I was even born, these are the only scenarios, as in these are the proven systems they use, the candlestick, your short patterns, your market structure, your any other thing you can think about, your price action, your volume. There are a lot of indicators you can use, your MACD, your RSI. Just mention it. Look at and gave this analysis on my, what's it called? I gave this analysis on my the phone what's it called, I did. So I don't want to keep talking. Trust me, this is what I use in trending my market. I just, apply all this, use all these, what's it called, to use all these, what's it called, other indicators as, so to guarantee, what should I call it, to guarantee my trade, to share what is happening in my trade, and just, take action, action. You go and lose money, but how long have you been in this market that you are even, I don't want to talk too much, please. No matter how much you've lost, opportunity must surely come on that day. Opportunity must surely come on that day. And all I can see is just a switch to back to the upside. All I'm seeing is just a switch back to the upside. What is exhaustion? Inside the falling wedge, bullish continuation pattern to give in rise to something called rally base rally. Using your Fibonacci again, Q zone. Confluences are just too many to tell you that, okay, if we are planning on going down before, this thing is sluggish. On the monthly is consolidation, on the weekly is sluggish, the daily chart is clearer, depicting what is happening on the monthly for you, telling you that we're close to the previous resistance zone. This is money, man. This money. 1930, you take a trade to 2060. Money, even 0.1, you know how much is that? No business can give it that to you. If you even say, okay, let me risk $500, 0.1, 1930 to 1880, I guess that's $500, 0.1, 500 pips. Let me risk it to make 1930 all the way to 2060. That's 300 plus 600, 900 pips. That's $900, 0.1. Then one lot, you're making $9,000. You're risking $5,000 to make $9,000. It might not even get here because your lower time frames will tell you that definitely you are not supposed to, risk more than, what's it called, 1930 to 1970, $150 to make $9,000. Because I've traded it for you. So this is all I have for you. This is how I look at my market. This is what gives me confidence whenever I'm in a trade and you see me leaving it to run for weeks. These are where I get my confidence from. So I don't care losing a trade because I know my next trade will make my 10 losses for me in just one trade. And I can sleep and go for days, weeks, doing other businesses and other things and getting it, knowing that there's a side also that even pays higher than my businesses I have here today. So this is the advice I have for you. If you can apply this to your knowledge also, trust me, you will go far. Or trust me, trading is supposed to be a university and you have to learn for 4 years, at least 2 years first, then use 1 year as experience before you can start making money. Because you need to know all these things I've known. What is giving my confidence? What is even making my trades, leave my trades to run? Why I'm not leaving trades? Why I can even take a loss of 200 pips right now? Because I know that I'm about making 900 pips back. So I'll just minus 200 from 900 and see 700 pips in profit. So whenever you take a loss, treat it the same way you have taken your profit previously. And please, out of 10 trades, don't lose more than 3 trades. I don't think since January we've given more than 40 trades. I don't think we've lost even up to 5. If they ever say 10, we gain 30, that's over 60% win ratio. Let's say we took 40 trades, we lost 10, we gain 30. 10 divided by 3. I guess in 1 divided by 3, that's still a very, very high risk reward because we're not even using that 10 we're even using. Definitely we're using 5R, meaning that we are losing just 200 pips to make that 40 we have we've made over 500 pips trade IS in it times 30. 500 pips trade times 30, and even the 10 we've lost is just 100 pips times 10. So that's not even a loss, that's business for you. We are consistent. So please, this video is very vital. I would tag this video using multi-asset analysis. Multi-asset analysis. I'll just find a caption for it. Multi-asset analysis. So it's just like a training session also. Multi-asset analysis. Are you getting it? Using a multi-asset analysis to analyze and build confidence in trading. I just find a caption to it. So this is what I have for you. Take care and bye for now. Bye. Any further questions, you know where to contact me. I'm still your mentor, the Vision X. We are coming back. We are coming strong. It took a lot of people years to get here. So don't apply much emotion. So take care and bye for now.